Hello and good evening, everyone, and welcome everyone to another episode of Refinitiv Perspectives Live. Today we'll be discussing the Sustainable Finance Review, Mergers and Acquisitions in 2021, together with our guests Matt Toole, Director Deals Intelligence at Refinitiv, and Philip Scipio, Senior Reporter at IFR. Welcome to the both of you, and thank you for joining us.
Good to be here.
All right, good to be here. Thank you.
Hi, Philip. Thanks, Matt. We will be discussing mergers and acquisitions in 2021. I have a couple of questions prepared already, and probably would make sense to dive in a bit more generally. So it's been quite a year for global deal making. What are some of the key themes we are seeing in this new pandemic era of M&A? Maybe we can dive into the subject a bit like that. Probably the question goes more into the direction of you, Matt.
Sure. Yeah. No. Happy to take that. It has been a pretty unbelievable year for M&A so far in 2021, with over 3.8 trillion in M&A so far through August, which has already surpassed full year 2020. I think about a year ago when we were coming through the pandemic in the spring of 2020, no one could have foreseen the level of M&A activity that we have seen over the last 12 months. And so we are approaching our fifth consecutive $1 trillion quarter. And much of that is being driven by large transactions around the world, cross-border transactions, technology deals, private equity, and also special purpose acquisition companies, which have really been a big story over the past 12 months. So a lot of the things that are driving deal making are really kind of pushing us to these all-time records, and the general capital markets and just the general market in general and market conditions are really pretty great for M&A. And we're seeing that also move into the sustainability space, as you mentioned in your open.
Philip, I don't see you here, which is a shame, but still feel free to add anything. I cannot see if you're wanting to add, but feel free to fill in at any time, obviously.
I would just add that, yes, companies in the mid-range, $2 to $3 billion in market cap, are really seeing opportunities to grow into different markets and to expand their horizons. CEO confidence is at, as you talk to M&A bankers who talk to them, are saying that confidence is at an all-time high post-pandemic, even with the Delta variant, kicking in and kind of shaking that confidence a little bit. It's still very high post-pandemic, what the world will look like, and companies have had a bit of time to think about how their markets will change going forward, and they're just taking an opportunity with financing readily available in the stock market, also revving at an all-time high, to use their own capital, their own stock to make acquisitions. So that level of confidence is really driving markets in all sectors.
I mean, we mentioned sustainability in general also as well, and mergers and acquisitions activity involving sustainable companies totaled by 84.3 billion. I read here during the first half of 2021, and you mentioned a couple of numbers as well, and up more than 4 times compared to the first half. I think you mentioned that to the first half of 2020, and having an all-time high. So do you think that COVID has continued to play a factor in this uptick, or what factors, maybe even in general, play a major role in this case? What do you think? This goes out to the both of you.
Sure. I can take it from a numbers perspective. I think it's a really interesting, innovative area of the market right now, this sustainable finance. And so that starts in the capital markets with some of the more mature products like green bonds, but also over the last 12 months, we've seen sustainability bonds, social bonds, a lot of capital raising to potentially help with the pandemic relief efforts, and even some new things like vaccine bonds and other things. So there's a lot of innovation in the space. We've seen that move through into sustainable lending on the syndicated loan side, and even some IPOs and some convertible bonds in the space. M&A is really at the end of that deal-making cycle where you see companies starting to do transactions or acquisitions happening in the space. So looking at sustainable companies, so whether it be electric or solar or some of the broader kind of sustainable infrastructure companies, we are seeing M&A begin to take place there in two different directions. Both private equity coming in and investing. We're seeing some asset sales happening as well in the renewables and energy spaces as well. And then special purpose acquisition companies have done a number of acquisitions so far this year in that space where companies can go public using these shell companies, oftentimes not in the same procedure as an IPO, and that's been quite popular in the sustainability space, both around solar, energy, electric vehicles, air taxis, batteries, a whole host of activity happening in this M&A world. So we are seeing an all-time record for sustainable companies involved in M&A, and I think as more and more companies become kind of more well-known, potentially larger, or look to make some moves in this space, M&A will be a pretty natural place to go, particularly with the market conditions that we're seeing right now, as Phil mentioned in the in the bond and equity markets.
I agree, and when you look at the league table for banks who are advising on these transactions in terms of financing, you see now in J.P. Morgan and Citi moving into higher spots, and as U.S. banks become more involved, you talk to bankers now and they speak on ESG in a way that they've never been able to previously. And they're actually beginning to drive companies in their thinking of how they would like to acquire, perhaps sell, change their portfolio mix. And so as these banks, these major U.S. banks become more involved and more sophisticated in how they think about and advise others on ESG, I think we'll see that market begin to grow, probably double again as we go forward, as these kinds of banks really take the market seriously and begin to advise companies on how to move and in terms of their acquisitions and actually even selling products that they don't want to be involved in the future.
Yeah, absolutely. And I think we've seen, so as you mentioned, some of the banks have and many of the large, top tier banks have really created these new sustainability banking teams, which pull in, bankers and experts around the bank to advise companies. It's interesting to see, the capital raising certainly in some of those green and sustainable products that are coming off of the debt syndicate desks, but then advising companies on their strategy around sustainability. And also, many of the banks have made very large commitments to, help underwrite and loan and lend and, advise companies in this space. And so it, as you mentioned, it wouldn't be a surprise to see, doubling for a number of more years as more and more, companies like, Alphabet and Apple, move into, a green bond or sustainability bond and raise capital that way. But then, the downstream M&A activity or getting rid of some assets that might not be seen as sustainable, all kind of bringing into that overall coverage group that is, really burgeoning in the investment banking world.
I mean, you mentioned also the different approaches, the changing times in general, if it has to do with the pandemic or not. There's the consultative approach is also changing. Can you also, or are you able to comment on the role that these special purpose acquisition companies, so SPACs, that everyone, or that was super high, was all over the media and the news. What role do they play in sustainable investment into infrastructure or other sectors as well?
Well, I mean, they're searching for a business combination. So, in the first quarter of this year, we saw over 300 SPAC IPOs come to market, mostly in the U.S. And they initially, raised capital, and then they're instantly looking for a deal. And so, a broad set of targets, probably, around many different industries. But sustainability happens to be one where we've seen a lot of activity. And as I mentioned, kind of the electric vehicle, air taxi, renewables, solar, a lot of activity happening there. And so far this year, SPACs have accounted for about 40% of all sustainable M&A. And there's companies going public, via this route. There is also strategic M&A happening and private equity investment happening as well. But it has been a big driver because some of these companies don't have a traditional storyline. They might not really be exactly perfect to be on an IPO roadshow and working more with some of the public investments and private investment companies. So I think SPACs are more of a natural kind of fit there, and we've certainly seen that play out in the numbers. And so we do estimate that there are just about 400 or so SPACs still looking for combinations, and obviously there's been a lot of activity around them, looking at regulation, looking at obviously that the pace of SPAC IPOs has slowed pretty significantly, but there is still quite a bit of capital that has to be deployed, and so wouldn't be surprised to see some more of that moving into the sustainability space as well.
I mean, if we are looking also at the M&A deal makers and that have not been deterred by the global economic disruption of 2020, what are some of your predictions, let's say, for the second half of the year and maybe even early 2022 in terms of M&A activity? If we're thinking about SPACs and the consultative approach that we also just mentioned now, the sustainability in general, what would be your predictions for the second half or even 2022 in terms of M&A? This would be also for Philip. I'm not quite sure if you're speaking or on mute.
Well, I don't know that I have a prediction, but speaking to bankers, looking at the year that we've had so far, $1 trillion quarter, first and second quarter, more than $1 trillion, and extending back into 2020, where you actually saw the kickoff in the fourth quarter and third quarter. Traditionally, M&A has its strongest period at the end of the year, and bankers are saying, well, we've seen this very exciting first half, and there was a lot of pent-up demand as companies began to get clear of COVID and began to see what the future might hold beyond COVID. And I think that they're expecting that will continue into the third quarter and fourth quarter as well, unless there is an unforeseen shock. And to say that no one is expecting an unforeseen shock is a little bit silly, but that no one is expecting something to happen in the coming 2 or 3 quarters that they haven't planned for. The Delta variant, I think a lot of companies are seeing, even beyond that, with the vaccines that we have still holding up pretty well to the current variant. And so they're expecting that the fourth quarter should be as strong, if not stronger, than the previous 3, and then the current quarter is also coming in strongly. The SPAC activity, which slowed a little bit in the second quarter, has already begun to pick up, and they're expecting that going into the fourth quarter, that it should continue to accelerate as companies begin to get a little more comfortable with the SEC's accounting guidance, which was intended to slow SPACs. Slowed for a second, but it's picking up again. So we're expecting that the SPAC activity might accelerate again into the third and fourth quarter. A lot of ESG activity, as Matt was saying, involved in SPACs looking for deals. So I'm expecting, as they're expecting, that the quarter should be strong and that we should actually hit that record as we were forecasting.
Yeah. I mean, the sheer level of activity in both on kind of some of the really large deals that are happening that are spurring consolidation, but even the number of deals, the volume of deals that we're seeing double-digit increases in almost every sector this year compared to a year ago. As I mentioned, technology really driving a number of the major themes, both technology and technology adjacent. But I think, Phil, as you said, I think the conditions that we're seeing right now, it would be hard to see anything totally derail them, particularly because, now post-pandemic, we've seen so much activity. And I think, a lot of companies are now making decisions based on other M&A deals that have been happening. So, if you think about, some of the large transactions, that sends all of the kind of people in that ecosystem, whether it be the board or obviously the C-suite or obviously their advisors, thinking about how do we react to this type of transaction? What does that do? And then there are opportunities as well to take advantage of the conditions that we're seeing right now. So I mean, I think as you note, it's seemingly that many of these pieces will continue on throughout the end of the year and into next.
We have also, I mean, it's going to be your own opinion or predictions that you think might be relevant. But if we are going one step further with exactly that thought in terms of predictions, what could come up, what is probably or most probably going to happen. If we look at a more regional overview or the American markets that seem to be more bullish, and you mentioned it also on mega deals, while the rest of the markets tend to lean a bit more bearish. What are some reasons for this, let's say, even stark polarization, and what can we expect going further if we look, let's say in this case, at the American markets, or maybe are there any other highlights from around the world that you would mention, if not just the American market?
Well, I mean, certainly the U.S. market is the largest, for overall M&A, and has been a driver over the course of these last 12 months with obviously some of the biggest companies, and certainly seeing some major cross-border activity, both acquiring and seeing acquisitions in the U.S. And that traditionally has always been the case. We're certainly seeing some great activity in the emerging markets as well. Particularly in the sustainability finance world, a lot of activity in China and India, where we're seeing a good amount of activity, not necessarily very large transactions, but a good amount of volume in that space as well. So, the Chinese market has been, both from a capital markets and an M&A perspective, growing for quite some time now, and I think that's a big area to watch for some of the emerging companies and the emerging trends. But then how some of that Chinese activity might potentially drive activity in other regions around the world as well. A lot of it has been kind of a very domestic story, but I think that can only go on for so long. And is there more outbound or inbound activity involving some of these Chinese companies, particularly in the sustainability space, where there is a lot of innovation happening right now? But as you would imagine, almost every region is really kind of partaking in this big boom of M&A activity, both broadly, but then also in some of the key sectors that we're focusing on, as I mentioned, technology, sustainability as well. So it's really interesting to watch all the dynamics happening, particularly as so many of the different kind of levels of M&A activity are really firing kind of quite significantly this year.
Sorry, Philip, please.
Oh, no problem. I would just add that
you're unmuted.
The U.S. came out of lockdown, and I think that in terms of talking about CEO confidence, that gives them a little bit more confidence in predicting how the economy would recover, and we're essentially right and rewarded for that move. In Europe, we saw a number of open, shut down again, and that plays a lot to the psychology of CEOs as to whether or not the economy will fully recover and when it will recover. And so I think that's kind of hindered the growth of the M&A market a bit there. But I think in talking to the bankers that I've been speaking with, that I think they're past that, and I think that the EU will pick up pace in the third and fourth quarters as well, and begin to match. I mean, as Matt said, the U.S. always leads in terms of the size of the market in M&A, and just the technology field being here would also aid in the U.S. being a considerably bigger market. But I think the EU is ready to reopen, and I think the CEOs there are more confident that they will remain open, so the economy will recover, and they'll be able to make those deals and feel more confident in their business models going forward. So I think that they will begin to participate. Some bankers are saying that we perhaps not fully captured that the EU was participating, but I think going forward, the expectation is that they will be there as well.
So despite
China is a little bit different. I think a lot of people are concerned on two fronts with China. The Biden administration's policies toward China tend to look a little bit like the Trump policies toward China. So a lot of those cross-border deals are not expected to come back in. So that might be a bit of a headwind, according to the bankers that I've been talking to. And then you also have the secondary thing with the Chinese economy perhaps not performing as well. So that also might be a headwind in terms of China or Chinese M&A fully participating. So that also might be a bit of a headwind.
But it still sounds like the focus is going to be a bit more, or as you mentioned, China most of the times, rather than the EU. That's going to be or that's where you think the focus should be or will be in, and that's the market that's going to come up or follow up on the American rather than another one, as I hear it.
Well, no, I think in terms of the EU will participate more fully than we've seen so far, and will begin to recover in terms of M&A data. But in terms of concern about China, there was an anticipation that it would be a greater part of the M&A story this year, or post-Trump, and that's not been the case. And M&A bankers are beginning to write that off as a recovering boom in cross-border deals coming out of China or going into China, because the Biden administration's policy pretty much is mirroring the Trump policy. So there won't be very much change in that, at least from the banks that I'm talking to. That's their perspective.
Thanks to the both of you. I'm just checking also, Side, if we have questions from the audience that we can take real quick, because I see our time is running out a little bit, but we have one that I would still like to ask, maybe also to the both of you. We have someone asking, as the various countries' emissions and sustainability targets around draw closer, do either of you see this increase in activity slowing or continuing far beyond those deadlines?
Yeah, I mean, I think that's kind of the backdrop that many, certainly, capital markets bankers and M&A bankers are probably looking at, how some of these targets, whether they be country level targets or even corporate targets, how the banking world can help, get to some of those targets, whether it be through capital, whether it be through public-private partnerships or project finance, whether it be through infrastructure. I think the whole sustainability finance world is really very open to new ideas. I think, as I mentioned, a lot of the banks are very committed to this, and with very large commitments themselves on top of some of the countries and some of the details that are there as well. So, I do think that will have an impact on the landscape and how companies and how countries and NGOs and regulators are looking at some of this. And I think the capital markets has proven that there is a place for them to really have an impact, both from a capital raising perspective and then also, as we're seeing now, move into the M&A world. And I think that will be a backdrop that all of the the deal makers around the world and their advisors will have to take into account as they think about next steps in this space.
I think that the goalposts will remain pretty much the same, but I think companies themselves will begin to pull forward in terms of meeting those goals and objectives, because you have their entire constituencies are behind meeting those goals earlier. Investors, governments, regulators, consumers, their own employees are also pushing for companies to meet these goals sooner and sooner and sooner. So in order to be rewarded for meeting them, I think companies will push forward and trumpet the fact that they have in fact met 2030 goals 5 years sooner, 2050 goals 20 years sooner. So I think that the companies themselves will begin to pull forward those goals on their own without regulators changing or moving the goalposts for them in order to be rewarded for them. I think one banker pointed to the Nestle deal as one of those interesting deals where companies are looking at not only what they have, but in terms of what they'll buy. If you buy Nestle, for example, are you bringing on plastic? So in every deal, you're looking at your ESG and your sustainability goals and whether or not you can meet them through M&A, and whether or not you actually hinder yourself when you engage in M&A. So it's really, as Matt said, it's impacted every sector. In every deal you think about these goals, every company is thinking about them. and in terms of all their constituents, their boards, their consumers, their employees, regulators, governments. So it's on everyone's mind and almost in every facet of the deal now, which is it happened very quickly.
Mm-hmm.
Thanks to both of you for joining this Refinitiv Perspectives Live and this episode. Hopefully I'm going to see you soon on another Perspectives Live. But so far, thanks for your time, and have a great rest of the day, wherever or how long ever the day might be, depending on the region. And thanks so far.
Thank you. I appreciate it.
Thank you.
If you enjoyed today's episode, you can download the full Q2 Sustainable Finance Review by following the link that you see right here in the screen. And comments, feel free to comment or type in your questions. We will get back to them soon. And I'm hoping to see you soon in another Refinitiv Perspectives Live.